Hi traders, good morning, good afternoon, good evening. Welcome back to my channel. And in today's session, we are going to discuss. First, we will review the Bank Nifty, how it has done in the last week, and predict what it's going to do in the next week. And then we will also learn about pivot points today. We will see how pivot points can be helpful in daily trading. And if time permits, we will also look at an option strategy. So today's session is going to be excited. So stay tuned.
Okay, so we are using share Khan today for analyzing the market. So this is Bank Nifty chart for 3 minutes. So let's analyze this on a bigger time frame. So let's have a look at monthly chart. So monthly, you can see this is our 20 period moving average, and monthly looks bullish, and it is retracing from this zone, which is your 20 period moving average zone. So this is a bullish sign, and if this month it closes like this, and the next month if it opens above this or crosses above this, then it is going to go bullish for the next month. And then let's understand on a weekly time frame. So weekly, in the previous video we have drawn this trend line. So trend line is still intact. As you can see, this has formed a pattern which we trade. So this is a bull 180 pattern. So what is bull 180 pattern? When a complete red bar is taken out by a complete green bar of the same size mostly, but this here the size is a little bigger. Okay, so this is a complete reversal sign. So Bank Nifty, you can blindly go bullish with a stop loss under this for the entire week. This is a very good sign. So this is a very good trade actually. Your stop loss is here. If you're doing a positional, you can just buy any put or a call and sit tight for the next week. And then let's look at a daily time frame. So daily, as you can see, this was the 200 period moving average, and this was the budget day when it has dropped from here and taken support at the 200 period moving average and started moving up. One green candle, your buy should be above this level. This is also our setup. Like if there are a continuous sequence of red candles and the market is falling 1 2 3 4 5 6, you have to wait for this reversal bar to form. After this reversal bar is formed, you can do this on any time frame. It's not limited to a daily time frame, but on any time frame, if you see the market is falling and then there is a reversal bar, which is this kind of a bar or a narrow range bar or a green small narrow bar, all those are reversal bars, and you have to place your buy order above this. If people who are on a positional, like big players and all, they must have placed a aftermarket order above this level, and most of that would have been triggered, and that's why there is a small gap and market rallied up. Now this is another reversal bar which has formed here, but there is a support below it, so you have to be cautious. Maybe next day, tomorrow, it can open in between somewhere, come to this level, and then can give a big move towards the upside, or it can stay in this range for a couple of days, like makes one small candle here, then moves in the sideways for a few days, and then also it can, when the moment it takes out this high, the next level is about weekly resistance here. Okay, so then now let's analyze this on a 3-minute time frame. Okay, so how was the market on Friday? Anybody can tell, people who are watching my videos, anybody can tell that this was in a sideways range, because the market created a high, then it created a low point, and whole day it was in the same range. It has not crossed this high also. Now Now let's understand the pivot points. For better understanding, I have mapped this for you. You can see this is monthly. So there is a monthly pivot here. So let's map it again. It's tally pivot monthly apply. Okay, so there is a monthly pivot. Now if we go to weekly, then we will get to see the monthly pivot. So this is our pivot range on a monthly time frame. So you can see the monthly support was respected, and from support it has taken a bounce. Now it is at a monthly pivot. So this will take some time for it to cross, but it is definitely bullish. If the pattern fails, your stop loss will be hit. It's not necessary that all patterns work 100% of the time, but looking at the overall trend, because our trend line is intact on a monthly time frame, weekly also bullish, the price is above the 20 period moving average, so we can expect it to go up. That is our theory. Okay, so then let's look at a weekly time frame. This is a weekly time frame. So this is a daily time frame. In daily, now you can see both the pivot points. One is weekly and then monthly. Okay, so you can see that the price got rejected at the monthly pivot point. So this is a monthly pivot point, but there is a support here. So that is the reason I have said that it is going to stay here for some time, maybe a couple of days, and then move ahead. Now let's use this on a 3-minute time frame and see how it works. So if you see, once you move to a lower time frame, here we have daily pivot R1 S1. So pivot points act as resistance and support. So their only job is to show us where is the maximum support, where is the maximum resistance, and these get respected in the market very well. So if you notice from the pivot point, excuse me guys. So if you notice on the pivot point, monthly pivot was this was its, so price has crossed the monthly pivot and then it has respected and taken support at monthly pivot till here, but it couldn't sustain, it broke the level, and now what was the support has become a resistance. The price came down into the 200 period zone. This is 200, yes, 200 period. Blue line is a 200 period zone. So never consider the lines as the zones, consider the above and below of the line also as a zone. So this is a zone. Okay, so it retraced from here. Again, it has got rejected at the daily pivot first, and then it got rejected at the monthly pivot. So this was the support earlier, now this is the resistance. So it got rejected from there. Again it came to 200 period moving average, took the support, but this time the push was so much that it can go only up to the daily pivot. So it got rejected here. Again it tried, it got rejected. Then again it took the support below the 20 period moving average and then went up but couldn't go up. So then came back, took the support. Again this time it got the volume it wanted and then it pushed up. It cleared the daily pivot, then it cleared the monthly pivot, but the selling pressure was high at this zone because of this seller sitting here. So it got rejected from there. Again it had dropped. So you see there is a tussle going on between buyers and sellers. Buyers try to take it up with all their efforts, but the sellers try to push it down. So this was a day where it is called a sideways days, where the market didn't go anywhere much, only few points of the movement. But since this was a Friday, even the premiums wouldn't have dropped that much. So that is it. So people who thought Friday is first day of the new series, we can buy, so those people will lose because some premium will be lost in these days and the price will not take that momentum, because for buying you need momentum. Okay, so this is about pivot. So always map this in your trading chart like this. If you're using a simple price action setup, you can only trade basis a pivot, or if you want to add, see why do we add these moving averages is we are adding more kind of confirmations to our trade, said stating that pivot is here, then moving average is here. So it is giving us multi-dimensional view and also giving us additional odds so that our efficiency can improve. So that is the reason we add this, but don't add too much, it will give confusion also. So my basic setup is 20 and 200 period moving average and the pivot points. So basis this, you can actually do any kind of trading. You can also buy options basis this, or you can sell options. On Friday I had sold options at the pivot level only. I have sold both call and put. I know this was going this way, so I've sold above this strike 31,400, and I've sold below the strike, which is about 31,000. I think I've sold 31,000 and 31,400 or 500 I have sold. The market stayed in the range, and that there was a decay for that. So now coming to option strategies. So let's see if we can learn an option strategy called as butterfly. So butterfly I have already taught you in my previous video. So in this I will teach you a 1 2 3 butterfly. For this I would need an NSE site so that you can understand this better. Let's go to equity derivatives, option change. So you can see the spot price is here at 12,098 and we have at the money straddle at 12,050. Okay, so now how do we do this? So we are expecting the market to be say assume that you are expecting the market to go down from here. You are assuming the market to go to, assuming that it goes to 31,600, or you expect this to fall to 30,600 as it's a support zone. Okay, so what we can do is we can do a strategy basis this on Banknifty. Let's see how it works out. So we have 31,200, which is a 240 call premium, 254 put premium. So what we can do is we can buy one in the money. Okay, so we are expecting the market to come down. So what we do is we buy in the money call. If we expect the market to go down, then we work with the calls. If we expect the market to go up, then we make this with puts. So we are expecting the market to go down, so we say that 31,200 call. Let's map it here. 13th Feb, 31,200 call. We buy one lot, which is at 243, and then next we leave 100 points or 200 points in Banknifty, and we say 31,400 call. We sell 31,400 call. We sell 3. Okay, and another 200 points. 30. We can choose the 31,500 also. I'm just showing an example. 31,600 we use 31,600 call. We buy 2. Okay, so let's analyze the position which is being created here. So 31,600 call is only 2. Why is 4? Okay, so we have a position something like this. So you are expecting the market to go down below 31,580. Where is the market right now? It is at 31,200. So your market is here at this line, right? So wherever the market goes, if your view is bearish, wherever it goes, it will be giving you profit of 795 rupees with with about 1 lot buy, 3 lot sell, and 2 lot buy. So your maximum profit will be if the market goes up by 3,360. Okay, so your range is from 0 to 3,159. Till here you will not have loss. till here 31499, you will have a 4000 rupees of profit. And what is your maximum loss? It is 3231. Maximum loss will start after this. So how convenient is that for you to do this? If you have a bearish view and say, you can be confident, if you can improve your quantity here, it will give you great returns. So you don't have to do any stop loss, no adjustment, nothing. You have to take the max loss which is there if the view goes wrong and get into a next trade. So that is how the trading is done. So you don't have to get into panic or make adjustments and do it. Just form a clear view, make your price action and technical analysis strong, and then do this. This is called as a 1 2 3 butterfly. So 1 2 3 butterfly gives you this flexibility. You can do this on either sides. You can do it on put also. Put, you are expecting the market to go up. If you combine both call and put, then it becomes like an iron fly where you're limiting your loss and then having a peak in between, so which is there in my previous videos also, which you can go through. Okay, so that's it for today's session, and thank you so much for watching, guys, and please do subscribe. And I'm trying to get you the best of the content, and you can only motivate me by subscribing to my channel and commenting, and also sharing with your friends who wants to learn this free of cost, genuinely. Yeah, thank you so much for watching.